Let's bring on board Mr. Aloke Bajpai, Group CEO at Ixigo, joining us as we speak. Alok, good morning from where you're at. In fact, good morning from where we're at as well, but it's fairly early for you. Thank you so much for joining in and speaking with us. Alok, let me first start off with that top line growth. It was very strong in Q1. Can you continue this kind of 10% QOQ expansion, or were there one-offs here in this quarter?
Well, there were no real one-offs here. I think what you're seeing is the outcome of a journey of more than a decade, right? So I think if you look at why Ixigo is growing at the pace at which we are growing, it's a function of two things. One, the kind of market we are going after, and we chose to go after the underserved next billion users, or the Bharat India 2 part of the market. And I think even though it took a bit longer to build the business, and of course build deep inroads into train, bus, and flights now, I think the fact is that it's a much bigger audience to cater to, right? Only 4% of Indians fly, but when you look at the numbers of people taking trains and buses, it's an order of magnitude bigger. So we kind of built a very large base, and we are now able to monetize this base. And this kind of growth has been coming in not just for a quarter, but if you look at our entire history, our CAGR, for the last 5 years has been quite good as a result of the fact that we've just started monetizing the large base that we built over several years. Will this kind of growth continue going forward? I think it's a function of two things. One, are there things we can do which we don't do today? For example, hotels is a category that we've just entered, and we have started to make some inroads there, although we don't disclose at this point, but we are seeing quarter on quarter growth starting to come in there. And of course, can we monetize our existing base even better with value-added services? So you would have seen that almost 29% of our transactions, have some value-added services also sold on top, which offer peace of mind protection. So our take rates are improving. Our contribution margin has remained fairly stable. There's been a slight dip in CM percentage, but that's deliberate because we want to chase growth at this point.
Alok, hi, Mahima also joining in. Just want to get a sense on competition. How is it looking like? What's the landscape? Because that's changing very fast. Just want to get a sense about that. And how do you think that you are standing out when it comes to, the other players who are doing the same thing?
I think Ixigo's story is a bit of a blue ocean story in that sense, because we chose to go after an underserved market where there was very limited competition, and in a way we are creating new market. Even if you look at our growth in competitive categories like flights, where there are multiple OTAs doing flights business, I think what stands out for us is the ability to tap into the first time flyer segment, which is coming, largely from people who today might be traveling on a bus or a train, and tomorrow, have the capacity or the per capita income to actually upgrade them. And the fact is, because a large part of this ecosystem is already using us, if you look at our user base, more than 500 million users in last fiscal year have actually used us at least once. If you look at our monthly active users, 84 million monthly active users. So in that sense, I think we are at a crux of, we are at that inflection point where you start to see that monetization, start to see the bottom line coming in with the operating leverage. And I think it's just a start in many ways for categories like flights and buses, where the penetration that we have is still much lower. So on trains, we are the market leader with 60% share of the OTA market. On flight, we would be the third largest player. Obviously, we'll wait for the others' results to see how they're growing. But we have been growing the fastest over the last 4 quarters. Buses, we are the fastest growing player and the second largest player. At an overall level, we are number 1 on user base and number 2 on revenue and GTV. That's where we are today.
Look, how do you continue to stand out in a marketplace that is this competitive? And you're getting into hotels as well. How does the scale up in hotel happen? Will it be, or rather, you've done this since December 23, but give us the strategy here. How will you stand out? Again, it's a crowded marketplace.
Yeah, I think every category that we entered was, we were not the first train booking site, nor were we the first flight OTA or the first bus OTA. I think every category we entered was already competitive. The only reason why we continue to grow and take share is because we are very focused on customer experience, right? So we were never obsessed just about selling tickets or monetizing, but actually going and solving deep utility problems in every category. If you look at products like Flight Tracker Pro or our ability to manage trips with AI, or if you look at our train tracking capabilities or train PNR prediction or the travel guarantee product that we launched, these are innovations that have come out of deep understanding of what people want and solving for their pain points. And a similar story, will hopefully play out, in other categories we enter, because even if you're a late entrant, the advantage you have is to look at that category with fresh eyes and figure out what pain areas haven't been solved yet.
Alok, when I was looking at your take rates, the flight take rates have slightly come down, year on year, but train take rates have remained stable. So I have a two-part question on this one. How do you see this improving? Because train take rates have consolidated, flight take rates are coming down. Is there a scope of improvement in both of these cases? And secondly, in the start of the show, Harsh was, he did mention that one of our senior did point out that there is premiumization of trains that is happening, right? So does that impact your take rates? How does that work? Try to, make us understand that.
Well, our take rates have been fairly stable, and in fact, they may have improved slightly on categories like flights and buses. But some of that is optics also, because last quarter, the fares on domestic actually came down a bit due to some of the turbulence that the sector was experiencing as a result of Sindoor and then AI 171. But if I look at the broader, bigger picture, right, the take rate comprises of, what kind of convenience fees exist, and there's commission, and there's also value-added services. I think our ability to have latch-on value-added services and the ability to also, figure out through data science and AI, what kind of pricing and what kind of essentially personalization one can do around who to market it to or sell it to. I think that cross-sell upsell funnel has really started to work. So you can expect that take rates are fairly stable. I mean, on train, we've been centered around 6%, and it's a regulated industry. So I think we've been managing to maintain it around that number, slightly plus or minus here and there is okay. But on buses, we've managed to improve it from 10% to 12% over the last 1.5 years, if you see. And I think we are at a point where we are satisfied with where we are. So we don't see any major changes happening there.
Alok, two quick questions. I have only 30 seconds left. So what do you do with the cash that you're going to be generating? Where do you invest? And second, what's the risk like of private equities exiting? How large is that?
Well, I think on the use of cash, see, I think we've always been very conservative on these things. I mean, Ixigo was built with very little capital and very little cash in the first 10 years, first 15 years of our existence, right? And I think we will, use cash effectively only where we see an opportunity to. And even at the time of IPO, we said we are always on the lookout for great companies. We've already done 3 acquisitions: Confirmed Ticket, Abhibus, and Zoop, and all 3 are playing out nicely. We will be on the lookout for investments and acquisitions out there. And also, in terms of opportunities like hotels or developing more AI products, we will not be shy of investing over there. And I think, what we expect is that, look, cap table churn, etc. I mean, every company goes through that life cycle, but I think if we continue to deliver on our promises, I think that is less of a worry at this point.
Sure, got it, Mr. Bajpai. Thank you so much for joining us this afternoon, or rather this morning. Viewers, in fact, that's all the time we have. So we'll have to close this at this point. From Mahima, myself, everyone who puts the show together, thanks so much for watching.